Let's take a look at some charts, information, figures, and graphs on Synthetix for Brave New Coin. So this is Synthetix.io, and according to them, they call themselves a derivatives liquidity protocol. For some reason in my head, I have them as a lending and borrowing type service more so than derivatives and derivatives liquidity. Nevertheless, what you do is you take your synth and you can mint anything you'd like in the synthetic universe. So you take your SNX, you can mint SBTC, SETH, SUSD. You can also mint inverse ETH, inverse BTC, which effectively means you're going long on the decline in price. So it's like an inverse ETF, sort of, where you're holding the downside. You're holding the token for downside depreciation. It makes sense if you don't, if you think about it like that. But we can look at the stats. We can look at, this is classic DeFi stuff. So TVL, who's doing what, when, and why, how much SNX is where, what's going on. We can look at yield farming. They actually have a lot of great stats comparatively to other DeFi platforms, which don't, frankly. They have a yield farming component. They have a staking component. They have all sorts of stuff going on here. I guess their competitors are other lending and borrowing type stuff. Curve, Comp, Maker's similar in my mind as far as lending and borrowing, different functionality. So it's hard to put any of this stuff in exactly its own, together as categories, right? Comp, similar. But they've been around for a while. They rebranded a while back, and they stuck through the bear market, continued to build, and here we are today with the current Synthetix product. You can see the breakdown here between ETH, USD, and BTC. It's mostly those three, and then the smaller slice here is everything else. Some Link, some inverse ETH there, iETH, some Euro. They announced that they added KRW, Korean Won. So it's almost like a Tether thing. It's almost like stable coins. It's got a lot going on. Inverse DOT, that's interesting. Looks like they have a DeFi index. We can go inverse on that as well. Now you can see longs and shorts, sort of my explanation of the inverse stuff. So they got a lot of stuff going on, mostly ETH, USD, and BTC, but you can do a bunch of stuff with it. If I look at the staking component, I mean, it's easy, simple, straightforward. I think the UI is clean and sleek and as simple as it needs to be, for any sort of DeFi thing. Not that new users are necessarily coming to the website to do their synths, because as long as they're connected to Synthetix, they can, anybody can do it from anywhere. They're early on the layer 2 transition to Optimism, and currently they're earning pretty significant APY on 5 million Synthetix. So at the end of the day, for any protocol level type improvement, when there's multiple options, the leaders in the field in DeFi, in the exchange portion, they're going to choose the winners, really. Users can have their say, but for the most part, if Sushi, Uni, Curve, if all these places choose Optimism as far as the layer 2 option, then that's what it's going to be, right? Like, that's the only game in town. That's how it's going to go down. Coinbase chooses Optimism. That's where the dominoes for the others start to fall, because the winner is very clearly one option, not necessarily multiple ZK rollups, whatever else layer 2 is decided on. So it's good to see that somebody has said, okay, I like Optimism. Let's go into that as far as the DeFi ecosystem. If you look at the total value locked, USD notional has stagnated a bit since January. So it's a little different from some of the other DeFi stuff, which has continued to increase. And obviously, if you lump BSC into that DeFi category, then that has taken off wildly since February. But I think because of the ETH fees, the Synthetix TVL has quieted down a little bit. Now, ETH fees are stabilizing, coming down. So it is a possibility that TVL and SNX and other DeFi stuff will start to increase it once again. Now, how DeFi Pulse calculates TVL, I don't know. I assume this is the layer 2 stuff. There's a big chunk missing here. They went from 160 million SNX to less than 120 million. So it's 40 million difference. 5 million's in layer 2. So there's something going on here. I forget exactly what it is. But no matter how you look at this, the amount of SNX in Synthetix isn't increasing. So you have to take that into account when you're thinking about the token price and what's going on with the token price and how the token price has basically been flat or in a consolidation pattern for the past several weeks. If we look at the transaction counts and average transaction values for the token, you can see it started all the way back in 2018, and really not many people were doing anything with it until kind of mid 2020, and then things started to happen. And it took off a little bit in August 2020, kind of with everything else. This was probably more speculation than anything. And then in January, late November, October 2020, it really exploded as far as what was happening from a synth minting perspective, at least subjectively, versus straight up speculation. So transactions went way up, average transaction values went way up. All that's sort of declined now and quieted down. Again, you're seeing that in price. These are typically hand in hand, right? So if you're seeing a bunch of transactions per day, price is probably increasing substantially, right? Like look at BNB. I just go to that over and over again because it's not ETH and it's something that's exploding right now. But if you're looking at those transactions per day on BSC or whatever, it's just skyrocketing, right? Part of that is speculation. Part of that is yield farming stuff. You know, the whole picture with SNX is very similar. So if this picks up again, you expect this on-chain stuff to pick up again. If we look at MVT and active addresses are still quite high historically for SNX, down significantly from the all-time highs to less than 2,000, sorry. But overall, this isn't like a mega bearish picture. It's just, it makes sense in terms of what you're seeing with ETH fees quieting down after exploding, with price quieting down after exploding. NVT, inverse metric of economic utility, in the line here is sort of at a new normal of 1,000. I mean, you can't really compare NVTs across chains. You can only really compare NVT to itself on each chain because each chain is different in how things work. So declining NVT is good. It says it is bullish. It says price is holding or declining, whereas on-chain activity and utility is increasing. So NVT is telling you price should be probably a little more bullish than it is considering the on-chain activity. If we look at the Google Trends for Synthetix, the word, which I believe narrows it down well enough to SNX, you can see things once again popped off in January, early February, quieted way down along with price, and that's where we sit now. So all of this collectively, on-chain stuff, the minting TVL statistics, Google Trends, all that makes sense when you look at the price, which is really pretty close to the previous all-time high, just kind of sitting, consolidating at around 20, which is a nice psychological support resist level. SNX USDT on KuCoin has enough data so that we can actually pop on the MA multipliers. This is the 1 year MA in the green here. This is 5x the 1 year MA. And then the white line is just a median line between the two, a midline. And it gives you a decent picture. You know, it's early, there's not really that much data, but it gives you a decent buy zones and sell zones as far as oversold, overbought. And you can see it picks the highs rather nicely. It's really only picked one low so far as far as painting it for you. So for me, personally, for a lot of this DeFi stuff, you know, I'd like to see a drawdown or some sort of support test. But like I already said, 20 is a fine support resist level to consolidate at. It was telling you at above 26 that, okay, this is overheated based on the previous year, 2 years, and then some data, right? So right now it's saying the upside is probably limited to between 40 and 45, somewhere around there. And the best buy zone is below 850. If we look at the 5200 and what's happened sort of August to December 2020, similar type of picture. You had this falling wedge, which has a bullish breakout after it resolves typically. And we're kind of seeing the same-ish sort of thing. Here we had a retest to the 200, which we haven't had yet. So maybe these EMAs need a little more time to get back together, have some mean reversion type stuff going on before this moves again. But trend-wise, it looks fine. It's not like screaming bullish, but it wasn't exactly screaming bullish here for me, even though it retested the 50 a bunch of times. This could paint some sort of inverted head and shoulders. Not that everything has to make a chart pattern all the time, but that's definitely immediately what I'm thinking about here is is there a inverted head and shoulders possibility? If anything here, there was a head and shoulders that broke up. So the bearish reversal got canceled right before January, and then January happened, and you're getting all this volume on KuCoin. So I like 14 as a buy based on the 200, based on the R2. I also like the expectation of an all-time high retest if this behaves like a falling wedge. And if you're breakout trading this, then you'd want to watch the horizontal resistance at around 22, 23 as this paints a potential inverted head and shoulders. So it's not screaming bullish or anything like that, but it doesn't look too bad just based on 5200 type stuff. If we look at the cloud on the daily, this is probably what I'd watch just because it's not as subjective maybe as sort of freeform chart patterns and stuff like that, but this is another trend metric, and once it's above the cloud with a bullish TK cross, that's your bullish entry signal, bullish long signal, bullish continuation expectation. So at that point, you'd be expecting an all-time high and then some. VPVR helps you out a little bit here as well. This is volume at price versus volume per day. So it's telling you that there's been a pretty significant volume between 16 and 22 relative to anything below 16, really all the way down. You know, it gets a little better in the 4s and 5s, but lots of consolidation volume in this range. So if it can break above 22, again, not exactly rocket science, all this stuff lines up, but anything above 22, you're probably going to see a bullish TK cross materialize. You're going to see a stronger case for bullish continuation, certainly once it's above 22. So if the cloud metrics can hold on the daily, I definitely like it as a long trade above 22. If we look at the BTC pair, if we look at the ETH pair, I mean, both of these are showing a bearish 5200 cross, some volume support below current level, but not much. So the USD pair looks neutral, potentially bullish soon, whereas the BTC and ETH pairs look much more bearish and looking for bearish continuation soon rather than bullish continuation. So 5200 bear cross, sort of below the yearly pivot. And if it can't reclaim the, 39,000 sats, something like that, you know, there's a nice VPVR resistance level here to sort of play with and watch for. I can't really see any chart pattern, you know, some of this stuff, there isn't always something there. That's not to say you shouldn't be looking for something, but I don't really see, you know, it's just a mess, right? There isn't really anything going on. But if this breaks a lower low, I'd expect 20K sats at that point, as far as the VPVR support, the previous low, that sort of thing. Probably a decent amount of support down here at around 20K sats, but this wouldn't, you know, it wouldn't expect upside from here for me on this chart based on trend, based on volume and that sort of thing. And the ETH chart is almost exactly the same. Tons of support here at 0065, 0063, kind of in a decently heavy volume zone already. But you can see here there was an Adam and Eve, bullish reversal pattern, a V and a U. We had a 5200 cross. We had some bullish momentum, and now all of that has faded, and you're getting that bearish cross once again. So I don't think Synth or Synthetix, SNX, I don't think it's going anywhere anytime soon. It's definitely sort of one of the pillars of DeFi, very sandbox oriented. You can do a lot of things with it. It serves a function, a unique function that really not many other DeFi products do. It does things a little differently that similar products do in the sector. Like I mentioned, Curve, Maker, you know, all this lending and borrowing comp. It's all similar, but not exactly the same. And technicals on the USD pair look neutral to bullish. Technicals on the BTC and ETH pairs look definitely more bearish than anything. And then lastly, if you want to check out the Technic Capital Managed DeFi portfolio on Enzyme.finance, currently in the process of onboarding and signing up and that sort of thing, but it's open. And here on Enzyme now, we have another one, the BTC and ETH fund with 4 million AUM that I trade. And how this works is it's a non-custodial portfolio management tool. So you can connect a MetaMask or wallet equivalent and essentially copy trade the trades I make. You can see that all the trades I make and for what and for when, deposits, full transparency, that sort of thing. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.